Have you ever juiced a lemon and you're just trying to make, or like an orange, and you're just trying to get like a fresh squeezed cup of like lemonade? The volume of lemons or the volume of oranges that you actually have to go through to get like a reasonable amount of juice is absurd. Sometimes owning and operating a therapy practice and trying to generate profit from your business can feel like just squeezing as hard as you can and not getting nearly as much as you think you should or want. And that's why we're in this series of talking about profit levers. How do you squeeze the juice of essentially what's already there without having to do a higher volume of actions, but kind of go like deeper and wider with what's currently going on rather than always building like more and up and out. So we've got one final profit lever today that we're going to walk you through. And it's probably the one that feels the least focused on in the space for a couple of reasons we'll dive into, and might possibly be the most important in this entire list when we really boil it down. Let's dive in today.
Yeah, guys, today we are talking about the price lever. The price lever is how much you're selling your services for. So, some quick math for you guys. If a therapist sees 20 clients a week, 50 weeks of the year, each additional dollar that they charge per session equals $1,000 extra of revenue. That's 20 times 50, right? Which means if you get $120 per session and your therapist should approximately generate about $120,000 a year. Increase that by a dollar and that's 121, which sounds maybe small in like that scope, but usually you're not increasing by just a dollar.
Yeah.
And usually you've also got multiple therapists. And when it comes to profits, every $1,000 like that can be really significant if your practice is just trying to cover some extra costs here or there, like covering some fixed fees, your rent. I mean, that could be the difference between being positive and being negative in your practice. And so when we're talking about price, it's one of the easiest things to change if you're cash, if you're a cash
Yeah.
practice. We've got some awesome things here for cash practices, but also some insurance practices. So definitely stick through the whole thing as we're kind of rocking and rolling through this process. Josh, I'll let you go ahead and grab this next little segment.
Bottom line is small numbers day to day add up really, really, really fast in the private practice space because you have volume on your side. One of the practices we know and respect, they do 36,000 sessions in a year, right? If they do 36,000 sessions in a year, you bump it by $1 per session. That is $36,000 of additional revenue for the practice, but probably profit if you've already layered in all of these other pieces that might appear bottom line for the practice. And so at the end of the day, you can't dismiss the reality that the small leads to the big inside of the private practice. And within that, if you are insurance, we'll speak to that just a little bit. Like, what do you do now? Because it probably feels like you're stuck in your current rates and your current pieces. I think we just have to address it. We see a huge trend of people saying, no, I'm going to become cash pay. I'm going to drop all the insurance panels. I want to control how much I charge. I don't want to bill. I think that is an appropriate response in some situations. However, for most therapy practices, grass is not greener on the other side of moving from an insurance to cash pay practice, primarily because you have all of the other business owner problems that do not get solved from this. So we could talk about the problems of just being a cash practice and that marketplace of that service, but just separate from that, you're still going to have staffing issues, recruitment issues, visibility issues, energy issues, intake success issues. Some of these are compounded by being a cash practice. And so if you're having kind of a struggling business on your own already as an insurance-based practice, we know that almost every single practice we've spoken to, the business development did not get easier after they switched over to cash, even if in the short term, cash flow, that simple part maybe became easier on a price point or a margin level. We know a lot of really healthy, vibrant cash pay practices. We know even more healthy, vibrant insurance cash pay practices. So this isn't meant to be a full deep dive analysis on which one you should do. I think both can build a great, sustainable, profitable business. However, if you're just trying to get leverage on price point, I don't truly believe that going fully cash payer out of network in this marketplace is often the path forward, because the grass is not necessarily greener on the other side.
Yeah, I actually think this is a symptom of something bigger, which is you actually don't want to work with insurance companies. And when you're small, you're the one who has to do it. You're the one who has to do all the billing and all the complications and other stuff. And so it actually becomes a burnout problem more than it is a price problem. Like Josh was
Yeah.
saying, we actually see profits, especially when it comes to marketing and intake processes, like the practices that want to control their growth. We're actually seeing the practices that are insurance have a higher return on investment because they end up working with more clients and they end up filling their clinicians and they end up utilizing the infrastructure at a higher rate, at a higher degree. And so don't go cash just because the money looks like the grass is greener. I'd also say, too, if you're an insurance practice, be sure you are negotiating your rates. And I mean quarterly negotiating rates. As your practice grows bigger, I actually say the number one responsibility for an insurance practice is to get bigger, because that is the responsibility that you have to your team so that your team can increase their rates, like how much they're actually getting paid. Everybody likes getting pay increases, and you can pass pay increases along to your team as you negotiate higher rates. So
Right.
the bigger your team, the more you're billing and insurance, the higher leverage you have over that insurance provider to negotiate your rates, which is a pay increase in and of itself. It actually doesn't increase the payout, or it doesn't really change how your clients experience the insurance. It's really just you, your practice, and how your practice operates, which is awesome. And then maybe the last point here is you can try dropping your lowest paying panels. Um, we've seen practices that kind of do this like hybrid model, that they're like only working with the insurances that um, reimburse at the highest level. So that way you just raise your average price by dropping some of the ones that are just too low at the reimbursements. We've also seen, though, that oftentimes if you just get on all of the panels, and I mean all of them, that you end up lowering your costs anyway so much that because you can just work with more people, that it ends up kind of evening out, and there's less headache and heartache because you can just accept more people. So in your intake process, it's just easier overall to just work with everyone because you work with everyone. And you end up getting paid about the same in terms of revenue, and your clients end up working with you for longer and better because you're taking their insurance. And if someone leaves or changes insurance or whatever, you can oftentimes continue to work with them, which is
Yeah.
good for continuing care. It ends up being great for profits. And so both are kind of interesting ways to work the price lever there. When it comes to profits, it's about the same,
Yeah.
except for maybe
I
the heartache.
think here's the rub, and you kind of mentioned it earlier on the pain threshold for insurance companies. There is a pain threshold there, administratively, clawbacks, risk. Like there's just a lot going on in the environment right now. We see that and we hear that every day with the practices that we navigate. So we're not ignorant to some of those realities. And I think sometimes the job is harder because you're also trying to construct a practice from a care level in terms of, oh, I want these therapists with these niche specialties. I want to deliver certain quality of care. Like you have some, good desires around your business unit, but they make the payer strategy of being an insurance practice even more difficult. You're not just in it to say like, hey, let's slap 20 clinicians in a building and fill them out. Like that's a little bit more raw than how most therapists are approaching the practical build out of sort of the lifestyle of their business. And so number one is if you want to avoid some of that slog and still stay on the straight and narrow, like you have to invest in the billing and the administrative side of insurance. And from what I've seen is a lot of practices that have figured this out very well, they have a much higher denial rate, meaning they're getting their cash held up, their claims are denied, things are flowed through. And that is all an operational success point to make sure that your revenue cycle management is the term that it's called, is like happening and is well optimized and is going well with your payers. And so just know that like if this is a huge pain point, resolve it operationally, because this gets into the cash pay side of things. If you don't resolve that strategy operationally, you're going to pay the operational cost in marketing if you move over to a cash pay practice. And so you have to ask yourself, which would I rather solve as far as a difficult problem in the marketplace right now? Would I rather operationally solve it with great billing infrastructure, or would I rather solve it with great marketing infrastructure? And as a company that has thousands of therapists work with us for marketing infrastructure, we know that that's probably not the bucket you want to spend even more time in, and that's okay. Let's talk a little bit about options for a cash practice. Well, this one's a little bit more blunt. You can just increase your rate by $1, by $10, whatever it is. This is a situation where I use the coffee shop analogy a lot, which is essentially if you walk into a coffee shop and there's a $4 coffee and a $6 coffee, you're probably not going to think a lot about it. You're going to buy your coffee and exit. If you're already in full flow of being a cash pay practice, it kind of serves you to push it up closer to that $6 mark instead of that $4 mark. Reflecting average reimbursement rates in the area isn't necessarily a perfect strategy. You need to account for the extra 20, 30, 40% of cost delivery to hire great cash pay therapists for better retention, for marketing costs and some of those pieces. I'd say most of our cash practices, they're doing great by having staggered fees across their experienced clinicians, but pushing most people up into the higher zone and doing annual or semi-annual rate increases, especially on just like new client volume coming in or some of those things. So direct price leverage here is at your disposal, and you must leverage it as a cash practice.
Yeah, oftentimes I think the pushback in this bucket is, what if my clients leave? Well, that's kind of the song and dance with cash practices. It's you're kind of always balancing the price you need to charge to work the hours that you need to work to fill your caseload at the cash rate that you need. And so some of your clients will drop and they will need to be replaced. Some of your clients will stay with you. We've seen clients go from BetterHelp following their clinician. Like I'm talking $35 session, right? $35 reimbursement. I guess like 70 bucks or something a month, however BetterHelp does their thing now. But it was like really, really cheap to get these sessions all the way to $250 sessions. And so it's not unheard of to have clients follow you if you're a great clinician, if they like working with you, if they see the results and the value and the continuation of care there. And so don't be too sheepish on yourself. Don't let fear make the decision for you here. Obviously, everything is hard. No one said that this was going to be an easy process, but you need to make really great business decisions here. And so when it comes to raising your rates, getting good at raising your rates is important. And it's important for your practice continuity. I'll also suggest in this segment that the cash pay rate increase is a great way to increase the price here. So if you have like maybe like a mix of rates on your team, so if you have like associate level like people, or if you, so like let's say you're doing some type of supervision, you've got some associates that are maybe a lower rate, you get to make offers as a cash practice that you would never be able to make as an insurance practice because you are not billing insurance. You don't have to do things by the book, which means you have a lot of flexibility on how you can engage the marketplace. And what I'm suggesting is you can have reduced rate sessions available and market that, which is really interesting. You can have sessions as your first session or your intro session, or sell in packets of like 6 sessions to change your sales infrastructure, change your marketing infrastructure so that it benefits the client and they can see maybe how they would maybe get a result better with you if they follow your pathing, which is really interesting. I'll end with one quick example. One of my mentors, he worked really really in depth with dentists. And he found that as a dental practice, they like sell, obviously you can go to the dentist for, cleanings every 6 months or whatever a year. But you can also sell like 2,000, like $1,000 crowns, $5,000 thing, $20,000 like full mouth reconstructions, basically. And dentists like to sell the $20,000 package, right? And they found that the dentists that offered financing sold more of those packages than the dentists that didn't sell financing. And then the dentist that sold financing and did all of the financing for their clients, like all of the contact the creditor and contact the blah, 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 sold even more. And so what I would suggest, not saying that you guys have to use credits. I don't know how credit or how Care Now works with you guys and stuff like that. But if you do financing or if you put together some type of plan, but then also do extra work for them, that's how you're almost guaranteed to get some more sales, to keep people happier. If you're doing out of network billing, like do out of network billing. We've seen cash practices that do the out of network billing and learn how to do it, and they're getting $400 for a session, and they never had to sell a $400 session. They just know how to do out of network billing. So
100%. I think one last thing, if you're trying to figure out how to prop up a higher price point in your marketplace, you have to invest in your team. This can look like additional trainings and certifications, but this is both in-house training and external like training and certifications. If you guys invest in high quality outcomes and integrative care and other pieces there, internally inside of your team as a culture and a habit, client outcomes are going to improve. And that's one way to really increase your cash pay rate, is because your current clients refer future clients. And whatever your current clients are paying, they know what they're paying. And they have that in mind when they make referrals. So if they make referrals, that means the future person probably is going to be willing to pay. So it's this cyclical feedback loop on the quality of your care, bottom lines it for the future customers that get sent your way with word of mouth referrals and inter-practice referrals and some of those pieces. So investing in your team through the lens of, will this improve clinical outcomes and clinical retention because they're better providers? That's big checkbox number one. But the actions that you often will take to make them better providers and improve clinical outcomes aren't very marketable. You can't put on your website, yeah, we sit down with our clinicians once a week and we do this X, Y, and Z training. It's like, okay, I don't care, right? But there are then external, right, certifications. Hey, we're EMDR certified. We are Gottman level 1, 2, 3 trained. We are whatever. And it's an external marketability. And I think I sometimes see the mistake of practice owners like almost crisscrossing those two, or thinking that they're accomplishing both in the same category. Having your therapist Gottman level trained, you might think, oh man, this is really going to help me market my practice more. Your market might not care about that. There might not be search volume. Your market might not know what that is. So unless you find a way to leverage that in terms of your external marketing and specialties, and clients care about that undergirded level of experience, it might not help your marketing results at all. And does it actually help your clinical outcomes? Maybe not. Like, are we just slapping an extra label on it? So all to say is keep that in mind. Does it actually help your marketing outcomes? Great. That's why we're doing it. Does it actually help your clinical outcomes? Maybe it does both. Let's get to a couple last items for options for any practice. And these are probably some of the most important ones. Attilio, tell us about kind of owning more of your own assets. Let's start with that one, actually.
Yeah. So if you own more assets, assets are things that you sunk money into and they produce revenue in some capacity. And so an asset might be like your building. So like, let's say you own a building and yes, you have the office space, but you also own the 3 floors above you or the 3 floors below you. So you can rent out some of those office spaces. And so it's maybe a large initial investment. You have to do you might have to really be interested in real estate for this, but it's a great way for you to put money in and get some type of investment. So it's like just an additional thing that your business can own. I also see practices, especially larger practices or just larger businesses in general. Once you've sort of saved up your typical 3 to 6 months cost threshold, you start dumping your money into the stock market as a business. You can own shares of things so you can make dividends and stuff like that. And so you can pump money into that for very low tax items. You can also start
Yeah.
developing like CEUs, or you can
Yep.
create programs where you're running other therapists through, or purchasable items for clients even. Create separate segments or do group therapy. Propping up separate segments. I recommend doing the asset building after you've got a good practice built that's consistently generating profits in a way that you can put money away for an asset, right? It doesn't make
Yeah.
sense to rent or to buy a building for like $50,000 and it's like a rundown building and you have to put a ton of work into it. And that's not what you're looking to do here. You're looking to buy an asset. You're not looking to buy a liability.
100%. I mean, it's a way to, if it's a true asset like a building, you might actually profit on the outcome of it. But for instance, even something like launching a like networking Facebook group or hosting an in-person networking event, what you're really doing is you're trying to own more of the experience or the process of the networking and the city's referral network or some of those things rather than spending above and beyond marketing or time. So there's a lot of ways to think through that, but you can just increase your profit margin by owning the asset instead of renting it, right? Or burning through it. And you mentioned it a little bit, but cross-selling services for any practice, especially in this situation of an insurance practice that is a little bit more stuck with your rates. We know that insurance companies don't want to increase your rates. You're gonna have to be the squeaky wheel constantly, quarterly and yearly to see any progress there. But within that, number one is I know practices that they do a lot of like play therapy. And so they'll cross sell groups or parent support, not even as much like therapy sessions, but other support pieces that a family unit might want. I know practices that they will do some sort of intensive quarterly or on the front end with either couples or EMDR. They'll have a $3,000 sort of initial intake assessment deep dive with a potential client that they'll charge for on the front end before enrolling into the cyclical insurance work that's needed. And they just describe it, hey, your insurance is going to cover your ongoing care, but for us to deliver that, we need to do this big thing first, right? And so there's tons of options to develop interconnected service items that resell or sell on top of the clients that are already paying you money. And that will boost your average customer value considerably.
Yeah. I also think internal referrals for that bucket. It's like, how can you improve the culture in your practice to increase internal referrals? Um, just another way to cross sell family therapy to the person who came in for couples or the person who came in for individual and so on. The last
Yeah.
bucket here is going to be client retention and focusing on lifetime value. I think this is one of the number one metrics as a business owner like should take a look at is lifetime value here and how can you increase lifetime value. The idea
Yeah.
behind this is that if your lifetime value for a client is $2,000, you expect to make that from one client, you can only spend and do so much because the client's only worth $2,000. But if you
Right.
find ways to increase the client value to $10,000 or $30,000, those are all great ways to just continue to push the line up so that you can deliver more, become more unique, and create an experience that really no one else can compete with you on. The
Yeah.
items here include maybe like list reactivation. So when people haven't shown up for 6 months, how are you reactivating them or re-engaging them to restart services possibly, or just check in to improve their quality of life? How are you creating an environment where maybe you're really solid on no-show fees so that you set good boundaries for yourself and also bill instead of having just empty slots on your calendar? How are you
Yeah.
having a process built that um, creates billing success for your practice so that you don't have money just stuck waiting, pending for it to hit your accounts and for you to pay out? Like all of these things are ways that you increase lifetime value for your clients. All of these things are ways to increase your retention and build a better, more robust culture for your practice.
Yeah. As we wrap up, I think the final point that we didn't actually talk about at all in this series, but I think is the most important point. If you don't have profit as a priority, profit will not be a priority. Julie Harris, author of Profit First for Therapists, practice deserves to be profitable, and you should have targeted profit numbers and outcomes for your practice and hold your practice against that for success. Maybe go check her out, her podcast, some of her resources, if you're wanting to deep dive on some of the money end of things, of fitting it all into the box. We'll catch you guys next time. Cheers.